The city's unrest taking a toll on both the local and regional markets as well, with Hong Kong shares plunging to a 7-month low. Hong Kong's embattled leader, Carrie Lam, promised that she would be responsible for rebuilding the economy once the violence de-escalated, and warned that the financial centre was at risk of being pushed into an abyss.
所以喺呢度，最後我請大家，我再次請大家放下歧見，安靜咗個情緒落嚟，用1分鐘去諗一諗，睇一睇我哋呢個城市，我哋呢一個家，大家係咪忍心將佢推落去呢個將會係粉身碎骨嘅深淵？
The political crisis has wiped $500 billion from Hong Kong since protests began in early June. The Hang Seng fell for a third day, closing down over 2%.
Cathay Pacific, Hong Kong's flagship carrier, cancelled hundreds of more flights and suspended all check-ins. It also announced it suspended another pilot for the misuse of information. The airline has been under pressure from Beijing to penalise any staff caught supporting the protests.
Cathay's share price plunged over 4% during today's trade to end down 2.6% after already hitting a 10-year low yesterday. Now, low investor sentiment also affecting the city's subway network, MTR Corp, which plunged almost 4%.
Mainland shares also down. Both the Shanghai Composite and the Shenzhen Composite are tracking losses. But the turmoil a welcome reprieve for investors in Shenzhen airport stocks, the nearby rival hub rallying as much as 10%.
And for a closer look, let's cross over to Hong Kong, where we are joined by Stephen Innes, Managing Partner at Valor Markets. Thank you very much, Stephen, for joining us. So markets clearly rattle across Hong Kong and Asia. What's your take of this situation right now?
Yeah, it just seems to have snowballed right out of proportion. Only a few weeks ago we were thinking, wow, this too shall pass, but this too hasn't passed. Seems like every weekend we're dealing with a further escalation. And now we've had the prospect of mainland issuing that this could possibly be a terrorist act. Now that just raises it into a whole new level here, where we're moving ever so closer to having so-called boots on the ground, or at least to having a more forceful military presence in Hong Kong. And that's the fear that we're going down. That's the road that we're going down right now. And this is why we're seeing the markets react so negatively, and why we're seeing capital outflows getting triggered right across the board right now.
Well, let's stay with that train of thought and tell us what you think we should expect if China does step in with stronger measures.
You're going to see an immediate wave of capital outflow. We're already seeing that happen on ETFs right now. It's going to really downgrade the property markets, and that's the biggest, the big elephant in the so-called room here. That market is so highly leveraged that if property values start to go upside down, and what I mean by that is if the property value actually goes below what the mortgages are, that could cause another wave of liquidation on equity markets to cover these margin accounts. So it's just an enormous risk that we could be dealing with here. So, there's still time for cooler heads to prevail. But at this point, things are not looking great, let alone the international condemnation that China would receive. They'd be not only facing a trade war front, but they'd also be facing political war fronts from other nations that wouldn't be so happy to see boots on the ground in Hong Kong.
Well, let's look at the equity values that you were talking about. So, Cathay has signaled that it will comply with Beijing. After all, its stocks has fallen, doing quite drastically. Do you see other firms, both local and internationally, also following suit?
I think it's a cost of doing business for Hong Kong companies to comply, especially airlines that want access to those key routes. On mainland. International companies, I don't think will fall into place. I can't see that happening at all. We have a look at what's being framed right now in a global trade war. I think it's everybody's sort of trying to manage their own risk and try to be helpful. Remember, we've got Donald Trump on the other side of this, who's probably relishing this happening right now. Although the U.S. is refraining from making any positive statements because they don't want to intensify the trade, but they're really not doing anything to pull back either. And I don't think they'll force any U.S. companies to comply, similar to what Cathay has done.
Are businesses preparing for the worst? And if so, how exactly are they doing that?
It's a boardroom decision. I think that's where the level it's being discussed right now. And it'd be naive not to think that exit plans aren't being made, because this is pretty aggressive here. We're not talking about Bismarck, North Dakota. We're talking about one of the biggest financial hubs in the world that could run into complete turmoil. So obviously the big financial institutions are making contingency plans. Obviously you've heard a lot about Singapore being mentioned in the background. That's a viable option. Likewise, other major cities in the region, but it's getting pretty serious, and these are the types of things that are going to continue to be discussed and will continue to put pressure on that delicate property markets.
All right, many thanks for your thoughts this evening. Stephen Innes, Managing Partner at Valor Markets.